right, welcome back to the fourth session of our financial management workshop. We have been discussing a number of issues here, and I want to believe that if you have been following the sessions, you are definitely getting value for your time. And again, I want to appreciate you for the time you are spending, in this workshop. So let's look at smart investment options for beginners. How you can grow your wealth by investing wisely. Now, investing is a powerful way to grow and achieve financial security. However, there are reasons why so many of us we don't invest. Number one of them could be fear of losing the money. Number two could be lack of knowledge. And then number 3 could be past experiences with financial scams. There are some of us that have some experiences with scams before. We have been scammed of our money and all that. And because of that, we develop a very, very lukewarm attitude towards investing money. For some other of us, we don't have the knowledge of savings. We remember that when we were in session 1, when we were talking about what should be your financial goals depending on your professional level or your work level, we talk about the young professionals. And so as a young professional who is just starting your work, one of the things you need to do is to learn about investment, study investment, take a course on investment, learn about investment. This is very, very critical. Right now, if you have learned about investment, that means you shouldn't be ignorant about investment. You have certain knowledge about investment. And for those of us who are afraid, we have not even made any effort before we are afraid, we will still lose money. Losing money is part and parcel of life. This is very, very important. No matter the precautions you take, you are still going to lose money. You don't lose the money to investment, you are going to lose the money to accident. You don't lose the money to accident, you are going to lose the money to impulsive buying. You are going to lose the money to a mistake. You go and buy something you didn't need, only to realize that you didn't need it. Right? You have been saving this money. You are afraid of investing because you don't want to lose it. Then you go and use it and buy something that you don't need. You lost the money. So, as human beings, you see what happens to people who build wealth over time is that they lose money to the point that they become immune to losing money. There is never a time that you not lose money. Even the wealthiest man in the world today is still losing money. The richest man in the world is losing money. The richest man in Nigeria, the richest man in Africa is still losing money. Losing money is like accident. It is part and parcel of life. That does not mean you should be reckless in your investment or in your investment decision. This is why we're having this workshop. We're not saying you should be reckless with your investment decision making. What we are saying is that losing money is going to be part and parcel of life. So if you are afraid of losing money, you lose even more money, right? So come out of that fear. Again, in this session, we are going to be discussing the basis of investing. We are also going to be discussing different investment options in Nigeria, and then strategies for making smart investment decisions. So let's get started. Why does investing matter? Why is it important to invest? Number one is what? Beating inflation. One of the reasons why you want to invest your money is to beat inflation. You see, if you are just saving money and just saving money and just saving money, inflation will continue to depreciate the value of that money you are saving. Take for instance, you're able to save 500,000 naira for a year. That 500,000 naira is no longer 500,000 naira as at December that year again. As at January, February, March, maybe it was 500,000. As at April or as at June, it has reduced. The value of that 500,000 naira maybe likely would have reduced to maybe 480,000 naira. As at that December, when you have been able to save the money and you now have 500,000 naira, the value of that 500,000 naira must have reduced. In real market terms, must have reduced to maybe 450,000 or maybe 400,000. The only way to ensure to beat inflation, to ensure that inflation does not deplete the value of the money you are saving, is to invest that money. You understand? So You have saved 500,000 naira, you have 500,000 naira, but in real market times, that 500,000 naira is 400,000 naira. How do you make up for the 100,000 naira that you have lost to inflation? You invest the 500,000 naira so that investment can bring back that 100,000 naira that you have lost. This is one of the reasons why you need to invest. Number 2 is financial independence. You cannot grow financially with just your salary or with just your income. No, you need other streams of income. You need your money to work for you. And the smart way to make sure that your money is working for you is by investing the money so that the money is making profit without you being involved in the process. So this is why investment is very, very critical. Financial independence. Next is wealth creation. Now, on a long time, if you want to build wealth, your salary alone cannot make you build wealth. The money you are making for your business alone cannot make you build wealth. What will make you build wealth is investment. Very, very critical. You invest your money, you can grow over time. It's able to give you huge returns. You can invest 500,000 naira today, and in 1 year, in 2 years, in 3 years' time, that 500,000 naira could have multiplied to 1.5 million. That is times 3. Right? This is how powerful investment is. Now, what are the types of investment that you should consider? If you are in Nigeria or maybe you are in any other part of the world, you can contextualize it. Number 1 is stocks and shares. Companies, big corporations have stocks. You always go to the Nigerian stock market to sell stocks and all that, and you invest in stock. As the company is making profit, you also making profit on the yearly basis. So this is one of the ways that you can invest. Buy shares in companies. There are different companies. Many companies in Nigeria, are in the open market for you to buy shares with them. You can talk about Dangote, you talk about MTN, you talk about banks. Banks are always there looking for investors. So you can buy shares with your bank. You understand? There are people the bank you are banking with currently, there are people making money from your services, and you are not one of them, but you are banking with them. So buy share in your banks. You understand? That is very, very important. MTN, every time you are recharging, you are buying data and everything, you are giving MTN money, but you are not making anything out of it, so you can buy shares with MTN. You understand? And so many other companies. These are just a few examples. Of course, while stocks can be volatile, they offer returns over time. That is the truth. They offer returns over time, and then you have to be very, very patient too. The next is real estate. Real estate is another way to invest your money. Buying a piece of land, buying a house and selling it, building a house and selling it, whatever it is. Of course, people still think that rentage is still another beautiful way of going into. It's still another beautiful, profitable part of real estate. Why some people differ, and I think that differing is reasonable, but there are still a lot of people who still make money from renting. With the house, with the line of shops, you put it up for renting. Hospitality is now part of real estate, so you can build something around hospitality, a hotel, whatever it is. If you have the money, invest your money there. Let it be running and be bringing in return. You understand? The next is treasury bills and bonds. You can invest your money in the federal government securities like the federal government savings bonds. So that savings bonds helps you to accumulate interest on the savings that you are making. And of course, it's secure because it's federal government will always have money. You always be there, so you can be secure there. Then you can also buy treasury bills. You understand? You can also buy treasury bills, another fantastic way for you to invest your money. The next is mutual funds. These are professionally managed. Mutual funds are professionally managed investment portfolios that pull funds from different investors and invest in various assets. You can even start one by yourself. Call a few of your friends, you people put your money together, put it in a real estate, put it in a property, put it in an asset, put it in whatever, put it in a business, and then it can be bringing you returns. It can be bringing all of you returns. At the end of every year, people can gather and share the profit. The next is agricultural investment. This is very, very critical. Agricultural investment. The lucrativeness of I think a lot of people are yet to realize the lucrativeness of agriculture. A lot of people are yet to realize the lucrativeness of agriculture. Agriculture is a very, very lucrative industry, and you don't want to miss out. You can do poultry, you can do fish farming, you can do crop production. You understand? And you will stay profitable in it. All it takes is for you to be diligent in it. If you have a diligent person to help you manage it, you will make a hell of money in agriculture. So if you have 500,000, 200,000 that you have been able to save over the past 1 year, you can put it in agriculture. Like I said, it's an investment. Every investment comes with risk, right? So you don't have to think that you go into agriculture and there will be no risk. There will definitely be risk. Do it anyway, because you don't know how it will turn out if you don't do it, right? You can only have permutations. The next is cryptocurrency and digital assets. Of course, you can also invest in cryptocurrencies. If you know the science of cryptocurrency and digital trading, you can also do it. For those who have, but if you are not grounded in it, it's not advisable for you to go into it, except if you have a professional that will help you, manage your investments and your assets there. Now, understanding risks and returns. Risk, we always, as long as investment is concerned, risk is going to be a constant factor. There will always be risk in everything you do. Even not taking risk is a risk itself. So it's critical for you to balance, to have a balanced understanding of risk and returns. Now, to do this, there is what we call the low risk investment. Low risk investment are investment that does not involve a lot of risk, which means no matter how you enter it, no matter how bad the market turns, you will still be able to come out with at least your principal, with the money you went in, right? At least, no matter how bad it is. Example, we talk about treasury bills, we talk about fixed deposits, and we talk about bonds. These are things that provide stable but low returns. They don't have high returns, but the risk in it is minimal, very, very minimal, very, very low, right? Then moderate risk involvement. Now, mutual funds, real estate, these things offer you huge return, but with very high level of risk. If you get into a mutual funds or you invest your money in real estate, you could lose the land for improper documentation, you could lose the property to government. So many things could happen. The value of the property could come down. Different things could happen that could affect that investment. But if those things doesn't happen, and if you're able to manage those risks properly, definitely you're going to come out smiling with a very wide.
Hi there. Thank you for choosing to participate in our workshop. We're thrilled to have you on this learning journey with us. If you just came across this video online or on our channel, you can access all the workshop videos on our website at jomorc.com or on our YouTube channel at Jomo Mentorship. Looking to take your skills to the next level? Explore our wide range of in-depth courses at elearn.jomorc.com. Here's a glimpse of what we offer. Number 1, customer service essentials. Number 2, team building and management. Number 3, corporate profiling and job application. Number 4, personal and servant leadership. Number 5, human resource management. Number 6, communication and public speaking. Number 7, project management. Number 8, marketing and branding. And finally, number 9, counseling and conflict resolution. Whether you prefer learning remotely or at your own pace, we've got you covered with flexible and engaging learning experiences. Visit elearn.jomorc.com today and start building the future you deserve.
Alright, the next is what we call the high risk investment. I'm talking about 3 types of investment: low risk investment, moderate risk investment, and then high risk investment. investing in stocks and cryptocurrencies have they have high potential of return, and they also come with significant volatility, right? So the risk involved is very, very high. You can wake up one morning and all your investment is gone, right? You can wake up one morning and your stock that is valued at 1 point something million is now valued at 200,000. So these are high. So whenever you want to make your investment, look at these options and choose the one that best fits you. You understand? Now, steps to investing wisely. Let us look at some of the steps that you can take to start making your investment and make sure that your investment is wisely done. Number one is to set your financial goals. Define your investment objectives. What are the things you are looking for to achieve from your investment? Is it for retirement? Is it for education, or is it for wealth growth? You want to grow your wealth? What is it you want to achieve with that investment you are trying to make? Sit down and define it. If you define it, you can know the types of investments, the type of risk that you should take. Next is for you to do your research. I think a lot of us are so lazy that we don't have time to look, to give a critical evaluation, to give a critical look to some of the things that we want to do. Please, if you want to invest your money, you need to take a very deep reflection and you need to conduct your research very, very well. This is very, very critical. You need to conduct your research. You need to cross your T's and dot your I's. This is very, very critical. Don't go into any investment rushingly. Sit down and do your homework. Then start small. Don't start investing big. Please avoid the temptation to remove all your savings and go and put it in investment. No matter how promising that investment is, you don't want to do that, right? So you want to start your investment small. If all you have in your savings account is 500,000, pull out 200,000. Do it first. Be patient. Building wealth takes time. You're not going to build your wealth in 3 years, in 5 years. It will take you at least 10 years to build your wealth. So don't be in haste, right? Relax, calm down, and take it one at a time. You're not going to make all the money at once. You see, as they say, if it looks too good to be true, it is untrue. Sit down and so that you won't fall into all these Ponzi schemes, right? So it's important for you not to be in haste. Anything that is promising you above 50% of what you are investing needs time for you to decide on it. You need to look at it. You need to look at those who have done it before. You need to take samples, reviews. You need to really do your research. Some people even go as far as promising 100%. I wonder how somebody can collect 100,000 from you and give you 200,000 back. It's too nice to be true, right? So you need to do your work. Diversify your portfolio. Diversify your investment. Don't put all your investment in one place. If you have 500,000 and want to invest the entire 500,000, don't put it into one investment scheme. Put it in different investment channels. You understand? The next is to monitor and adjust. Monitor your investment. Know when to pull out your investment, and know when to sell your shares. As you have a share in the company, and all of these things are things that really require a lot of work on your part. You understand? You are the one who wants to build wealth, so you have to do the work. Building wealth is not going to come to you cheaply. Now, what are some of the common investment mistakes that you need to avoid? Number one is falling for Ponzi schemes. Be cautious of schemes that promise you unrealistic returns. Any system, any investment platform, any investment opportunity that promises you unrealistic, well, sometimes it's difficult to tell whether it is unrealistic or not. But if it is sounding too nice, if it is sounding too promising, please sit back and watch for a while before you do. Sit back and watch for a while before you do. Next is lack of research. Investing without proper knowledge can lead to losses. You can lose your money not just because the system does not work, or because the system is not effective, but because you are not knowledgeable you are not knowledgeable about the system. You are ignorant about the system. So you can lose money as a result of that. So it is important for you to what? To deal with, to do your research, to do your due diligence. Next is ignoring inflation. Please, in whatever you do, don't ignore inflation. Don't ignore inflation. Don't ignore the economy. Don't ignore what is happening within the political scheme. Because whatever that is happening within the political scheme can close down your investment, can block your investment, can render your investment and your savings almost invalid. You understand? Then finally is emotional investment. Please remove your emotions from your investment. Don't invest your emotion alongside your investment. Thank you very much for participating in this session. I'm sure you don't want to miss it. Thank you very much, and ensure to implement all the things you